Oh, the bank is basically the under the supervision of RBI, the banks are performing the banking operations, and they raise deposits, different types of deposits, and times deposits, demand deposits, and people will traditionally would be keeping this money in the banks, or they would be people also invest in gold, or they also invest in uh, real estate, in property. But capital market is increasingly now becoming important because one, capital market allows the money to be raised to be used for capital formation directly. Like bank, when the money goes, then it goes through credit to the industries or to the different sectors of the economy. But when you are investing in the capital market, it is actually basically going directly to the companies as equity. You are participating in shares of the companies, or when you are talking of mutual funds also invest in shares of the companies. Also, in some cases, corporate bonds, what we call debt of the company. So companies can directly raise the corporate debt also, rather than going to the bank and get the loans from them. So the capital market has different kinds of instruments. One is equity, where equity capital is raised. Another is debt, corporate debt, that is raised. Third, there are newer instruments now coming, is uh, mutual funds, where mutual funds you don't invest directly. You have some fund manager. There are pooled vehicles, and the pooled vehicles then invest in the capital market. And so there is a greater safety in the sense that you don't have to take risk directly yourself. You don't understand about individual companies, individual thing. You have to do research in order to understand which company will give you better. But in that, mutual funds will allow you to pool your risk. Some fund managers will be there, and they will be, based on the purpose of that mutual fund, they will be investing accordingly on your behalf. And you can always, whenever you need money, you can also liquidate investments, your mutual fund investments. Then you have REITs and InvITs. These are also newer kinds of market instruments, where REITs are like, when you don't directly do a real estate, you can actually take a small portion of a real estate. Some company will give you, returns based on rental incomes of that real estate. InvITs are based on like highways or roads or power lines, infrastructure. You can participate. You cannot directly participate in infrastructure. Yes, you can actually take the subscribe to units of REITs and InvITs. So, which means that the capital market provides you different kinds of opportunities depending upon the different types of risk. Now, if you say that the bank deposit, there will be a risk will be very low, because you also have a deposit insurance. Even if there is a bank failure, some insurance will be there. Your deposit will be safe. Up to 5 lakhs today, it will be. But the market instruments do not have any such, uh, you know, uh, head. That means you take risk, basically. But in general, people have found that over a period of time, if you invest on the long term basis, so reasonably you get much higher returns than the bank FD rate. So therefore, the people are participating in that capital market, and that money is used by the companies in order to invest in the productive assets, in factories, in services sectors, and then they also create jobs. So therefore, economy also benefits. So this is the way, in nutshell, I can say that the people have different kinds of assets choices, and they should also diversify their asset choices. If you are a wise investor, you would not put generally you should not put all your eggs in one basket. You should diversify your choices. You can do something with the bank in the short term, in the medium term. You can have some portfolio of mutual funds. You can have something on commodities like gold, or you can have something on the real estate directly or indirectly. So if you have a different asset classes and something on debt, which is debt is either FD directly, or you can also take corporate bonds. Now SEBI is also facilitating an individual, even 10,000 rupees you have, you can take a bond from the market online through online bond platforms which are registered by SEBI. So the good investor is one which actually balances the different asset classes according to its need. The risk is relatively higher in the equity and risk is lower in the debt products. So you should combine that in order to take a balanced risk. So the whole task of responsible investing is how you should take a balanced risk, not take too much of a risk. But if you do not take any risk also, then return you will get it also will be lower, because return will be higher if you take a little bit of a risk. But you should know when to take risk, how much to take risk, which suits your family circumstance. Yes, on technology, like if you are saying technology for cyber frauds, so one, we are saying that, you should know where are you investing. So SEBI is providing you all kinds of facilities, like which are the brokers, registered brokers with SEBI. The list is available on our website. What is the broking apps there? Because now everyone is doing through mobile phones or other applications. So what is that application? That those are available on the SEBI website, all the exchanges website. We are also telling the platforms, which means the Google and the Play Store, that please have only whitelisted apps. That means apps which are approved by SEBI, they are only should be there, and others should be pulled down. And very soon we will have that there. Only whitelisted apps will be available. That means no duplicate and other apps will be allowed in the Play Store. We have already requested them. They are working on it. But even now you can check up which is the right kind of app in the SEBI website. Right? Even we have also a SEBI app, Sarthi. You can download it from Play Store. That will tell you which are registered people and all that. So what are the registered advisor? If you have to take somebody's advice, then rather than, taking this advice from the internet, first you should know which is a registered advisor. That registered advisor, who is the registered advisor? That is also available on the SEBI website and the app or the exchange. So a lot of information is there. People should come to the official channels. They should come to SEBI channel, to the exchanges, and find out which is the right app, who is the registered broker. Then another tool which we have, I explained to today in the seminar, is that SEBI check. SEBI check. You can take it from SEBI Sathi app, and then there will be a SEBI check. 30 seconds you will know. Within 30 seconds, less than 1 minute, you can find out which is the bank account which is reliable for securities market. If that is not reliable, don't put that money in that account. Main problem is that, somebody is there, senior citizen is there, someone, that is a problem. So we are saying, okay, how do you check? How do you know? Because everything looks similar. They will make a similar looking app. From looks, you will not be able to find out. So you should just go to the SEBI check and check it. Before investing, basically account, which when you put the money, anybody can tell you, but the moment you put the money, like If you are going to, pick up vegetables, you will do a lot of research. Even for 1 kg buying, you will see this way, that way, whether vegetable is correct, not correct, right? For 30, 40 rupees, you do so much of research. And for putting 10,000 rupees, 1 lakh rupees, 2 lakh rupees, should you not do even this much? Just check 30 seconds. So we are giving you a facility. Point is, the media has to reach out to the people to tell, please use official channels to do that and understand first before investing. What you should invest in, what you should not invest in. For mutual fund, you have mutual fund distributors, right? If you want to take mutual funds, mutual fund distributors are there, and you can, they can advise you. But if mutual funds also tells you, okay, this is the account you have to put your money. First check the bank account, whether it is a regulated bank account or not. So this is SEBI check, which we have introduced. Similarly, 1st of October, then also a new UPI handle also. If you will be there is a handle, UPI at say and so. Like you have also UPI handle, right? In mobile phone, you can do, and from one mobile to another mobile, you can transfer the money. There is one UPI handle. So UPI is great. We are doing, fine. Na? Everything we can transfer with immediately, scan and then do it. There is a UPI handle. Now we have created a new handle UPI system for the securities market, which is got VALID. Valid will be there in the name. VALID. Valid. This valid word will be there in that handle. If any handle you see, he will say, my handle name is 99 this 66 at UPI. You will say, no, valid name is not there in this at UPI. Only UPI will not do. Word valid has to be there in that. So, but a simpler thing is check, SEBI check. So when he says, this is the UPI handle, okay, put that UPI handle name and then check. He will say valid or not valid. If he says QR code, check valid or not valid. This valid or non-valid when we are talking is for the securities market. Otherwise, you may transfer the money from X to Y. He can send you the money. You can send the money to him. That's your choice. But when it comes to securities market, if you want that this money should go to the right account and it should not be just picked up by some fraudsters, so you should do this check. Yes, it is good. 1,24,000 are there. Investor. Yes. It will be uploaded to the website, SEBI website.